right, Bruce back. Good late evening. Let's jump into MSTY. MSTY's, well, it dropped quite a bit, but it really looking pretty good in other ways, so pay attention. So let's take a look. 1180 from 1263, so we dropped down 6.58%. And we also did better by only dropping 5.36 to 28.97. So always at the end of the week, we roll, right? So we did not add any synthetics, but we closed out our two 510 trades. So I'll show you those on the May tab, and then we sold short next week our 517 at 1280. So let's go look at how that looks. I'll take the 943 that were written on Friday. We got 2872, which is pretty nice. So we collected 2.7 million to add to our 136,000 that we had written earlier, right? So let's look over. No new shares were added. So let's look at our cash. We did move to a long-dated treasury, 12/1/2031. When's the last time you see that kind of date out there? So we took money out of the government money market, First American, and put it in this long-dated treasury. And that roughly was the selling, rolling the calls, right? Because it cost us, we captured 99%, 99+% of our weeklies. So we rolled and picked up 2.7, right? So that's our net gain in cash. Let's take a look at, what else did I want to tell you here? Okay, nothing right there. Well, we can look at synthetic, but we didn't close anything on the synthetic, right? But by trading down, we generated more. We generated a drop. Right now we're at 1180, so we're 9.19% below our strike price. So the put value goes up, and even though we had an 819,000 book loss, we now have a 10.5 million literal loss, right? By the puts being worth, right? We buy calls, we sell puts. Well, you want to get to 1300. We have till 719, but I always like to point it out, right? It's not a loss, it's a paper loss. All right, so let's look at our weeklies. That tell us a lot. So I'll show you how we closed out everything. But basically the week of 510, we captured like 99.5 of all the call money written, right? And that was like 2.7. This week, we've written 2.8. Well, we wrote the other ones, but this week the total, we wrote a couple of them on 5.9, but on 5.10 we rolled the bulk right here. So we now have 2.845. We've already captured 24.08% of these weeklies by moving down, right? They don't even come into play for another 100 points, but that is the bulk of them. So on one hand, we don't want to run by that number, but we sure would do well on our synthetic. If we ran 100 points, we would have a big gain in the synthetic as opposed to a loss. So, you know, it's a trade-off. But I think here I wanted to point out on the chart, I didn't redo the chart, but you can see how we ran up into 13. There's one more day that's not on here, but here's our close, 1180. I can move the arrow, and you can see that we want to be maybe 1150-ish if it pulls back to touch that line. We're just a little bit below this 12 line, so it's not quite where this is, but it's close. So I'm saying maybe I ought to say 1150 to 1170, right? So it's very possible we open come Monday, drop a little bit, and then run higher and close higher, which would be a great sign that it just bounced off this flag pattern, this bullish flag pattern. So let's see, because once it breaks down, then in theory, this pattern runs very narrow with a line down below, right? But then you don't want to drop on that break, because all of a sudden, 800, 600, those kind of things could come into play. There's a gap back here at 800. Do I think we're going there? Absolutely not. But could something happen? But I get good news when we go over and look at our payments. But let's go to holding first. So, I take off the board, and let me just show you where this happened, right? So we paid 19 cents, almost 20 cents. But look what we wrote these for, $31.80, $30.05, right? So our gain, it only cost us $15,000 out of $2,353,000, right, that we sold them for. So we had a nice gain there. This one we had to pay $2,000 to buy back something that we collected $340. So I'll take that all day, 99.5%. So on this guy we paid a nickel, but we only sold it for not a lot of money, $80,000, and we paid $250. So we captured all of that money, right? But now we're up to, with this new stuff, assuming that we capture it all, we stay below 1280 or right at 1280. That's a big chunk of money, 2.7, right? And we're already 40% or 24%, mainly on these first two. But we're up on this one. I'll show you on the holdings, right? So we had written this one up at $31, right? So all of a sudden we collected 2.708. Our liability is only 2.1 million. So we already made 600,000, right? I'd say we made, it's a paper gain, right? But with only 5 trading days. So we captured 22% of that and 64% of these others. But this one skews it because it's the bulk of the contracts, right? So that's why we get a number like 24.08 for the collective average. And here's our synthetic loss, right? It's the put that hurts us, right? Down at 1180, $120 of that is real value of being below the 1300. The other 140 is premium. That's why our call is still worth 154. In another 3 weeks, it's worth nothing, or, $1. So they work both ways, we want to move up, but we want to move up slowly. We don't want to blow past our weeklies. That's the concept. So how did no shares added. So how's fair value? They're saying we're priced 30 cents above the net assets divided by the shares outstanding, or market cap as it's commonly known. Okay, let's take a look at payments. I think this is good news. I tried to, use some more things. So our weeklies are performing well. That's an understatement. $1.34. I mean, we just got paid last week, right? So this is 1 week of short call, and we're up to $1.34, right? We've collected 5.6 million. We used May 11 on that. So we're doing awesome. Now, that assumes that this 2.8 we get to keep, right? That money would drop if we don't get to keep it. But as I always say, if we run past 1280, then our synthetic is going to jump up, right? And that paper loss is going to turn into a paper profit. So you want to make it in weeklies by going up a little bit. We're going down a little bit, and that's giving us all the weeklies, but it slowly is hurting us on the synthetic. But we can fix that in a moment, right? When we start rallying. Well, let's go back to the payments. We are averaging $1.34 on the weekly. If it drops just to $1 a week, right? because that was like 2.7. We've written 2.8 this week. Let's say we only get $1 because the 1280 goes up to 1300. Well, now our synthetic isn't facing a $10 million loss to come over here. So I added $3 more, and $1 here gives us 434. We could be back in a nice payout situation, right? And especially if this is in the negative like this, which means we have real money, then when this gets to $4, they'll pay all of this. They only limit this typically. Now the very first month they limited it, right? They paid us $4.12. Well, they didn't, because we only had $2 here. So they took 2 of this 8 so that they could keep some money in the piggy bank for bad situations. Last time we only had 241, and we had this big loss over here, 32 million, and they still gave us another 11 cents, right? I was figuring they were going to pay us around $2. I thought they were going to use the 2/3 analogy because of the big hit here. But now we're winning over here and we're winning here. Let's see how long that holds. But I'm very optimistic we're back in the $3 and $4 payment. You know, just tune in and I'll educate you as we go. So that's what I got for you. I'm super positive. I think if this plays out and we drop here, that could translate to a $27 price. And I'm talking almost intraday. You know, if you have the confidence that we're going to hit that line, and you see 27 trading because Mr. is down around 1140, 1150, 1160, to me, that's a good buy. Now, you could turn around and wait for it to bounce and come back up and get into the 30s and show that it tested it, and it maybe a day or two of trading back above it. You have more confidence we're going back up, but sometimes if you want to buy low, you have to, pull the trigger. So again, it just really depends on whether you trust it or don't. So this is what I'm doing now on the weeklies, on the new one, right? I assume everybody knows we captured the old one. So we're now at 2408, which I pulled from the holdings, right? And that's what's at stake. So anyway, we're in a good position, other than this is 8%, which could get tested, but there's a lot of positive. These look pretty strong, but they're minuscule. This is the bulk. Hopefully when they add, they continue to add up in the low 13s and don't write anymore at 1280. Depends on what we do. All right, I think that pretty much covers it. Stay positive. MSTY is looking much better than Coney at the moment, but I like both of them. I'll do YBIT and Crash this weekend, and also some gold and silver opportunities that I've been watching. I was able to retire in the decade of the 2000s just by playing gold and silver and watching when the runs start. So we're definitely getting ready for the miners to participate. Gold's already broken out. When silver runs, it will run very strongly, and there's a lot of opportunity. I'm not going to not cover these. I'm very bullish on BTC and on some of these, and I'll continue to report. I just want to show you guys some other areas that I have some expertise in and some prior experience. Okay guys, this is not financial advice. I'm not a financial advisor. It's fun and education. Have a great weekend. Bye.